Hello and welcome to the week ahead from the Financial Times in London. Here's what we'll be watching in the run-up to Christmas. The Bank of Japan holds its final policy meeting of 2016. Will FedEx enjoy another record holiday season? And it's a big week for UK data, which could provide further clues as to how the UK economy has performed since the Brexit referendum. But first to Tokyo, where the Bank of Japan is set to adopt a low profile at its last meeting of the year. Economic data has finally swung in its favour, with business confidence picking up, and there are signs that inflation, after falling steadily all year, has bottomed out. And a dramatic weakening of the yen since the BoJ last met has transformed the outlook for growth and prices. This changing picture could be reflected in the BoJ's economic outlook and forecasts, as our Tokyo Bureau Chief Robin Harding explains.
The outlook for Japan's economy has been transformed by a big fall in the yen, from around 104 against the dollar to 117 since the central bank last met in November. That's taken a lot of the pressure off the BoJ to take further action. One thing to look out for, the BoJ has capped 10-year bond yields at zero. The price has edged up to about 0.07%. Markets are asking, how high can that go before the BoJ steps in and starts buying to drive it back down towards its target?
Now, while the Bank of Japan's governor, Haruhiko Kuroda, is unlikely to make any change to policy, observers will be on the lookout for any sign that the BoJ plans to taper off its asset purchases after it's shifted attention to the cap on bond yields. Now, when FedEx reports its fiscal second quarter results on Tuesday, investors will be keen to see whether the US logistics company had a strong start to what the company expects to be another, what it calls, record peak holiday shopping season. Last year, the Tennessee-based group experienced 15% growth in high-season volume and delivered more than 325 million packages. But can FedEx keep pace, and will it boost the company's bottom line? Here's our US reporter Mamta Badkar with more.
Analysts expect profits to climb to $748 million in the 3 months to November, compared with $691 million in the year-ago quarter. Revenues are estimated to jump nearly 20% from a year ago to $14.9 billion. The numbers will include deliveries made during the Thanksgiving weekend, which unofficially marks the start of the holiday shopping season, and those made on Cyber Monday. According to software developer ShipMatrix, FedEx, like rival UPS, is struggling to keep up with holiday shipping volumes. Updates on peak season operations will capture investor attention, as will updates on the company's integration with TNT Express.
On holiday shipping volumes, time delivery rates for ground services at FedEx slid to 96.2% in the week to December the 10th, down from 96.9% the previous week. But while those numbers might sound high, ShipMatrix says they can still result in hundreds and thousands of parcels being delivered a day or two late. And finally, to the UK. With the Christmas holidays fast approaching, a flurry of economic data will be published this week, which could provide further insight into how the UK economy has fared following the country's vote to leave the European Union and amid political drama around the world. In the third quarter, the UK economy grew quite strongly, which defied the expectations of some economists who thought we'd see an immediate recession following the vote. Our economics correspondent Gemma Tetlow has more.
We'll get an update on the quarter three figures for GDP growth. At the moment, the ONS has said they think there was 0.5% GDP growth in the third quarter. They may revise that this week. We know there will be a bit of a reallocation between some of the components because the ONS have admitted that they made a mistake in how they allocated between trade and investment. But we'll see whether we get a revision to the overall figure as well. On Friday, we're also going to get data on how the services sector performed at the beginning of the fourth quarter in October. That will be quite interesting because so far it's been the services sector that's really been providing all of the growth for the UK economy. It was the only sector that expanded in the third quarter. We already know that manufacturing and construction shrank in October, so it'll be very interesting to see what's happened to the dominant services sector in October.
The services sector, which makes up 4/5 of the UK economy, was the sole contributor to growth in the third quarter, expanding by 0.7%. And it will need to turn in another strong performance if official forecasts for 0.4% GDP growth in the last 3 months of 2016 are to be met. And that's what the week ahead looks like from the Financial Times in London. See you again next time.